All right, I am filming this at roughly noon on a Friday, and it was one of the craziest mornings ever. I wouldn't have even if this was like real time, I wouldn't have been able to describe what's happening because everything moves so quickly. You have to be prepared ahead of time. Let me go into what I did. I made a little bit, on DELT, and I lost a little on TSRI. DELT, you might remember I held it overnight, um, and TSRI is a new earnings winner this morning. So you've seen me do a few trades now. This was a winner. TSRI was a loser. SPU was a real big winner, and I only took a small piece of that, and GRPN was basically flat. So I'm kind of like 2 for 4 on trades that you've seen me analyze. I totally missed the biggest winner of the day, which was EVOK, which, if you remember last night when I was reviewing it, I was railing on it because it's too choppy and too liquid for me. And remember, it has that bad sushi kind of chart. Let me get rid of these alerts. And now it's just going, supernova off of its lows from the 1s to the 4s. And it really hurts my sushi example. But that said, the sushi example exists because sometimes if you do buy 50% off sushi, you're okay. And in this case, the longs have beat the odds. I would say that the odds were probably, I don't know, maybe 50-50, maybe 40-60 that it would keep going. But in this market, I'm sure that helps. It also had more news, which, another big investor came aboard today. So you've had two big investors, kind of basically buy this at discount prices. So couldn't really predict that, but I guess the big investors see something, a value here. So I don't really regret missing it. Let me show you my students. They love it. They'll just buy anything. That's what it comes down to. I can try and teach and I can try and come up with this grading system, but people just want hot stocks. And I know this teaches the wrong lesson, but hey, sometimes these hot stocks do just overwhelm the power of reason. Dresky, he's buying EVOK yesterday in the mid 2s and the high 2s, and he sold it today at nearly $4 a share. He bought it at 255 and sold it at 278. Then he bought it at 3 and sold it at nearly 4. So this is the right strategy. So Dresky gets it, although I think he's risking too much. Here's Peyton. He didn't post his specific, entries and exits, but he put in basically $1,000 yesterday, and he's up to $1,400 today. So he took 40% profits. Peter, actually, NFEC was a midday spiker, but the same kind of midday spike. So I just want to show you, taking the meat of the move. What is NFEC doing? NFEC, yeah, so it's spiking right now. This is today's spiker. I'm kind of taking a break so I can finish this DVD, but it started the day at 1-ish, and it goes up to like 180. It doesn't look like much on the chart, but this is a 75% spike, and if you compare that on the multi-month chart, this is one of its bigger spikes and big volume today too. So I bring up this trade from Peter because he's not buying at the low. You're trying to piggyback strength, and you're taking the meat of the move, and he's making $480 on like a $2,000 investment. That's pretty good, and he got it from my Trading Challenge chat room, which has its own chat room. And some of my students, really prefer that chat room. There's a lot less people, a lot less noise. So good job, Peter. Here is Keone. He is trading from Hawaii, and I just want to show you this tweet. People tweet me all the time, but I love sharing, solid stories because he's getting up at 3 a.m. and he's going back to bed at 4 a.m. This is like Rocky style, getting up in the middle of the night, drinking some raw eggs. Okay, so awesome dedication. I know trading from Hawaii, it's a tough time zone to trade from, but it is possible if you're dedicated. And Keone, bought EVOK at 320, sold it at 4. This is a 25% overnight win, and he's waking up at all hours. And then he went into more detail here, sharing his spreadsheet of some of his recent trades. And, you know, he's making some money on MDGS, which I traded. He actually did really well on that. 240 out at 280. Oh, no, I missed that, actually. My bad. That was the play I missed that morning because I didn't want to chase it. But he chased it, and he did well. And then he had a small loss on EVOK, now a bigger gain. And for July, he's up, 1,600. So this is a kind of spreadsheet that you guys should keep. I know Tim Grittani does, and I know a lot of my top students do. You know, the more meticulous you are with your record keeping, the better you'll understand this, and the more you'll develop, because a lot of this is just self-development and self-discipline. Here's Philip. I'm going to give him a follow for this. He bought it. He did not buy it yesterday. He bought it this morning when it was spiking, and he sold it 6 minutes later, and he made 50 cents a share. So this is actually a really good trade. I probably would have done this if EVOK had not been so choppy and so liquid and did not have the sushi, the bad long-term sushi chart. But I really like this idea of buying just before the market open and selling into a morning spike. And, sometimes it's quick. A lot of people are like, why are you so quick? Well, sometimes, if you can make 50 cents a share on a $3 stock, you take that every time. Here's Jeron, made $4.50 before breakfast. He was buying EVOK in the low threes, selling it in the mid threes. Here's Terrence, buying it at 302 yesterday and selling it pre-market today at 345. And notice what a lot of these students are doing. They're buying into the market close and selling the next day so that it's not a day trade. This helps them escape the pattern day trader rule. A lot of you guys think you need to have all these like intraday trades. A lot of these moves are made overnight. Here's Clint. He made roughly $1 a share. And again, he got the idea from the chat room. He didn't get the idea from me. Frank was in at 315, out at 385, and that pizza looks damn good. Lauren, I have some female students. She got in at 3, and she's out at 382, 25%. You take that, Lauren. You go, girl. Here's Josh, first profit. And again, he's making nearly $1 a share. I'm bringing all this stuff up just so that you can understand that my indicators are not going to work every time. My indicators were wrong about EVOK today, but I'm not going to change my indicators just because of it. I guarantee you a lot of this is because of this market that we're in, this really hot bull market. So I might have underestimated the market a little bit, and, I'll adapt to that. And here's Alexander, made 380 on TSRI, which was fantastic. I'll get into that in a second. And then he made 465, but he's studying the best patterns, and it pays off. So congrats to Alexander. And then last but certainly not least, Justin. He says, I'm the king of selling too early. Learn to safely take the meat of the move. And he made $1,000 overnight in SPU. Remember, I was buying SPU at 1060-ish yesterday, and I sold it in the low 11s. Went to the 12s. I wasn't sure if it was going to break 12 today or not. And guess what? It did in a big way. And it was, today was tricky because it actually, let me just show you if I can zoom in even more. It actually dipped right at the open. So it was already up to 13 pre-market. So that was a nice, you didn't have to worry about the resistance in the mid or low 12s. It was uptrending all pre-market long. So it was a breakout. But right at the open, it dipped from 1320, and for the first 2 minutes, 1320 down to 1270. If I had been long overnight, I would have sold. I would have taken the $1 a share profit and not risked it. And this was a delayed morning spike. And this is what we're seeing a lot of today, on SPU. From the low here, 1270, up to 1470. So a $2 a share move in the first 8 minutes. And, it's holding up. So that is this crazy market. But I want to talk right now about TSRI because this was the play. I was buying this pre-market because this was an earnings winner. So let me go over it for a second. 1 month, you can see that it's a breakout, but let me pull up more longer term. Let me pull up 1 year. You can see that there's resistance right here at 495. Let me go back even more. So the real resistance is right here. You're just looking at previous highs. So the resistance here is at 550. And, you know, this is a crazy volatile stock. I mean, even at 512, it's up 34% on the day. But pre-market, it was trading up here, you know, between 6 and the low was like 550, and then 6 and then 550. And I was buying it in here in the 550s because I thought that it could retouch 6, and if it could retouch 6, it could break out. Here was my trade. Where was it? And I ended up losing on it just a little bit, but still wrong. I mean, right overall in the sense that it would morning spike, wrong in my trade. And so I said I bought this low float, low market cap earnings winner. That's a multi-year breakout. Oh, they reported earnings last night too, I should mention. In the mid-5s, it hit 6 earlier today, so I'm buying it solidly off its pre-market highs. Still up 45% pre-market though already, so I'm only taking a small position as it's a risk. I very well might be chasing, but similar low floater TCCO spiked to the 7s all in the first 5 minutes of trading. So this could happen here, hence why I'm risking it and buying it pre-market. So normally I do not buy pre-market. There was not a lot of volume, but it had the multi-year breakout. It had earnings. It has the low float. Let me just do a quick analysis. I guess we'll zero out SPU. This was from yesterday. You know, remember, and I'll get to DELT in a second. That's a whole interesting story. And I would do DELT again. I would just do it a little differently. Let's get to TSRI, when I was buying it this morning, because this is a new trade. This was my only new trade that I've done today. Pattern and price, you know, you've got multi-year breakout. I'm not chasing it at 6, which it had already hit. I'm buying it on a dip off its highs, so that reduces my risk a little. And it's, you know, low flow, low market cap, which is the creme de la creme of patterns right now, where you can get this $1, $2 a share spiking. So on a pattern price, I mean, this is a 20 out of 20. Risk reward, this is where it wasn't perfect. You know, it already was up 45%. A lot of these times, as you saw actually, as what happened with TSRI, but you know, you don't know what's going to happen until afterwards. But what happens sometimes is you have a dip before you know, a spike, and that's exactly what happened here. And you don't know how big the dip is going to be, so all you can do is cut losses quickly, which is what I did. You know, I was buying it in the 550s, selling in the 520s, and I lost like 20, 30 cents a share. And that was, I thought that was pretty good because, you know, it was scary. You know, you don't know if you're going to lose 30 cents or you don't know if you're going to lose $1 because the spread is like 20, 30 cents. It's not as liquid as I like. So the risk reward really wasn't that great. I'll give it a 7 because I did buy it on a dip, but it's still scary. Ease of entry and exit, I mean, I'll give this a 3 out of 10 because it's scary. Past performance history of spiking, not so much. It has a little, but I'll give it a 5 out of 10. At what time is it personal schedule? You're aiming for, you know, the morning spike. I actually bought it pre-market in case there was a spike right at the open. So I'll give this an 18. Normally I don't like buying it pre-market, so that's why I have to ding it a few points. Actually, we'll change to a 17. Reason catalyst earnings. You know, right now earnings aren't getting rewarded that great, but for me it's a decent pattern, so I give it a 7. Market environment, again, for earnings, it's a 7. So it's a 66. Not quite up to standards, but at the same time, you know, what's the risk? You have to think in terms of, okay, can it really spike? And if you're right, if I was right, you know, I can make $1. I might make $2 a share if it really spikes like TCCO did. And if it doesn't, if I stick to my rules and I cut losses quickly, you know, I lose 20, 30, 40 cents, which is what I did. So, you know, this was a little bit of a speculative play, and that's why you'll see me take various position sizes. You know, I specifically said I'm only taking a small position as it's a risk. And I didn't do this whole indicator formula thing before I bought. I've internalized all of this, and I kind of, even if I don't know the exact number, and, I didn't know the exact number of what this would be until I just plugged it in. I've internalized it. You guys have not yet. So I would suggest you putting in, all these different indicators before you risk your hard-earned money. I was kind of, right in the sense that it would spike, but I also knew that it was a risk. It was not going to be, a perfect play. And what happened was, right from the market open right here, it spiked up for like a second from, it was fading, and it spiked up to like 550. So I could have been break even, but I wanted to give it a chance. And when that failed within the first, 2 minutes, I'm getting out on this red candle because I just can't risk it because I don't know, it's failed. I thought that it was going to spike right away, right from the get-go. And it didn't. And so I got out on this red candle, and I was fortunate to cut losses quickly because just a few minutes later, it's down to 450, and I'm losing $1 a share, which is not acceptable. And then this is what's so crazy. It spikes from 450 up to 650, all in the first 10 minutes or the first 15 minutes of the trading day. And now it's come back down. It's below 550, which is the multi-year breakout, so I'm not really tempted. But this $2 a share spike is exactly what I wanted, but I couldn't get it because of this, dollar a share drop. And so I actually copied some comments that some people said in my chat room. This one guy, Gerard, says, "Aren't you pissed that TSRI came back and you could have sold it for a gain?" And I replied to him privately, and I'll tell you, I'm not pissed at all, because even though it did spike up $2 a share off its lows, it only spiked $1 a share off of my buy, and there was $1 a share of downside from my buy. So if there's $1 share of upside and $1 a share of downside from where I get in, that's terrible risk reward. That is 1-to-1. Remember, I want 4-to-1, 5-to-1, 10-to-1, 20-to-1. So I greatly underestimated the dip. In hindsight, I should have waited for the dip. But then again, even if it was a dip, I probably would not have bought, because I don't like buying earnings plays that dip right at the open, because then it's a question, is this really an earnings winner? The delayed morning spike proves that it is, but I am not a fan of these morning dips. Remember, PEIX had this yesterday, and it hasn't really done that well. Let me pull up a 2-day chart of PEIX. Remember, it had that morning spike and that dip, and you got a little bit of a bounce, and then it's been using, 670, 680 as resistance. So if you're buying on the dip here, at best, you're going to make 20 cents a share. That's not good enough. The difference was with TSRI, the bounce was not 20 cents. It was $2 a share, which is just insane. You don't normally get like $1 a share drop. You don't get, $2 a share spikes, $1.50 drops, and then $2 a share spikes. That's just way too much choppiness and volatility. So frankly, I'm kind of happy that, I can just take a small loss on that. This is, even if somehow I had fallen down and just woken up right now, 3 hours later, I would have pretty much the exact same exit. So didn't get the worst, didn't get the best. I got the mid-range, and I cut losses quickly. I stuck to my plan. But if I was making this video, I would literally be like in the middle of a sentence saying, "Oh, this is a failed morning spiker," and then it would have spiked, and I would have been disproven. Like, that's how quickly these stocks are moving right now. It's not always like this. This is this kind of market that we're in. So it helps to be prepared. And here's my DELT trade, why I have a profit overall on the day. Remember, I was buying it yesterday on the dip, specifically with support at 2. And now it's actually using that failed support that, it didn't really dip below 2 yesterday. Let me get rid of these technical indicators. It did not dip below 2, and so that was my support. Right from the get-go. I mean, pre-market, I think this was just a typo. I don't think it ever really touched, below 2 here. It was actually uptrending nicely pre-market. for the vast majority of pre-market today, it was uptrending, and I thought that there was a good chance that it could morning spike. So the good news, the reason why I have a profit, because even though it was a failed morning spike, and right now if I was still holding, I'd be down, I don't know, like $500. I sold a great deal of my position in here at 250-ish. Because remember, yesterday afternoon, 250 was resistance. Yesterday midday and yesterday afternoon and after hours last night too. So 245, 250 is resistance. It broke it a little bit. It got to like 260. But remember what I say about breakouts. I want a convincing breakout. 5 or 10 cents a share on a very volatile and speculative stock is not a convincing enough breakout for me. So I sold a big part of my position in here just to play it safe. And this is the same kind of setup that I did a few weeks ago on TOPS. And I was, if you were in the chat room today, you saw me commenting that the similarities were like really crazy on tops. Not lately, but where was it? Right in here. Where it had already spiked and I was buying it in here at 230-ish, and it was downtrending, and then it was uptrending a little pre-market, and then right at the open it spiked big. And I did not capture much of this morning spike. I sold a lot of my position in the 250s and then the remainder here at 3. And, I'm in from the 220s. That was a solid win for me. And I did not really do anything different on DELT. The only difference is that tops turned out to be a big spiker and DELT turned out to be a big failed spiker. So this is what I want to teach you. If you can use the same strategy and the same rules over and over again, it doesn't matter if the stock is a successful spiker or not. Because I'm promising myself and I'm, holding myself to a certain discipline that I will sell some of my position into a spike. In hindsight, yes, I probably should have sold everything, but I didn't know that it was going to be a failed spiker. I just knew that at 250, I'm in at roughly 210. I mean, that's a 20% win for me. So while, yes, it could go to 30% win or 40% or even 50% win, I'm going to take some profits off the table just in case. And it was that decision that gave me an overall profit on the whole trade. If I had not done that, I would have been, barely profitable or maybe even had a loss. Out of all the stocks, DELT was the biggest percent gainer yesterday, and now it's the biggest percent loser. So when you're trading these volatile stocks, you have to learn to take profits. You have to. You can't have it any other way. Let me analyze DELT right here. And let's go back in time and pretend we don't know that the morning spike is going to fail or not. But why am I selling here in the 250s? Because I got a lot of questions in the chat room like, come on, Tim, give it more time. Well, let's just analyze it for a second, shall we? So at 250, so DELT at 250. Because one thing that I haven't shown you, I've looked at these numbers and indicators when I initially enter the trade. But the numbers are going to change based on how the trade is going. And so I think it would be beneficial for you guys to see what I was thinking at 250. So at 250, the pattern in the price, yes, it's uptrending because it's up a few cents on the day, but there's resistance at 250, 260. And it hasn't clearly broken resistance. It was down, even though it's uptrending, it was down for the most part of pre-market today, which is not a great sign. EVOK, which turned out to be the biggest spiker, was uptrending all in pre-market. So if I had to assign what level pattern and price DELT at 250 was, I would give it a 10. It is not a 20 anymore. And the risk reward is going to change dramatically because now, what if it fails at 250? Or 260, in this range. Now, this could be the very top of the range, and again, pretend that we don't know that this is going to be the top of the range. But let's just think, okay, with pre-market, the market opens at like, I don't know, 10 or 15 minutes from now. I'm trying to go back in time in my brain, how I felt. The stock is at 250. It's at resistance. It might break out. It might not. If it breaks out, it could go to 3. It could go to 4. We've seen that. But if it fails, it'll probably head back down to 2, and we don't know if 2 is support is going to hold. So let's say that there's maybe 50 to 70 cents a share of upside. It could get back to the 3s. Remember, yesterday's high was 3-ish, 310, right? So there's 60 cents of upside. But if 250 fails, there's 50 cents of downside. So that's not very good. You know, there's roughly 1.1 to 1 risk reward. So there's a little more upside from 250, but there's a lot of potential downside. And as we see with these speculative stocks that are up on no news, if they fail at key resistance levels like DELT is about to do, the downside is quick, you know, like TSRI, where it tanked $1 a share, okay? So you have to be overprotective when you're trading these speculative plays. So the risk reward at 250, I would give it a 4 out of 20. Not very good at all. Ease of entry and exit, you know, at 250, it's easy to get out because there's buyers, which is, you know, what I sold into. But again, if those buyers dry up, can you get out at 240 or 230? Or is it going to drop all the way to 220? So I would give the ease of entry and exit down to a 5. It's not going to be necessarily that easy. Past performance history of spiking. Remember, we looked at the chart yesterday and it had a history of going up a little on day 2, but also failing and finishing down on the day on day 2. So I would give this a 3 now that it's already up a little, but not really spiking that much. What time is it? Personal schedule? Well, it's pre-market. You know, I want to ideally still give it to the market open to see if there are any fireworks, but I'm just not sure. So I'll give it a 13. The reason the catalyst is a low float play, which works right now, and the market works great right now too. So it's a 55, which is not very good. Remember, going into the day, it was an 85. So because the stock has popped a little bit, but not popped enough to really make me confident that it can spike much more, it's changed from a great trading setup to a mediocre trading setup. So in this case, at 250, why am I even holding any of it? You know, I have a 20% profit. Why don't I just take it? And in hindsight, I probably should have. I wanted to give it time for the market open to see if it could pop a little bit. So I probably should have been reviewing this spreadsheet, you know, a little bit more when I'm, you know, looking at this stock pre-market. And this would have kind of illuminated things for me. I did good, you know, I did well by selling the vast majority of my position up here, but I also got a little wrecked because I held until the market opened and I didn't necessarily know that it was a 55 down from an 85. And this is what I'm saying with these indicators. You know, we're going to come up with software. We'll probably build it into stocks to trade where you're going to be able to see these numbers changing, you know, when the stock price changes and when the pattern changes and when the odds change. This is not a little, you know, a little thing here, okay? This is a big, big, big advancement in penny stock trading. And I'm really excited to see where this goes. So, you know, this is a good lesson for me on DELT. I shoulda, woulda, coulda sold it all. But at the same time, I don't know if I'd ever really sell it all just before the market opened because I still want to give it that chance. You know, here's where, you know, we're kind of different than robots, right? A robot, if I was a robot and I had no emotion and I was just looking purely at the numerical value here, I would be like, sell all, down from 85 to 55, not good, risk reward now. But as a human, I kind of want to see the action. I can't help it. And also, you know, I've seen just how far these stocks can spike, namely, you know, TOPS, which I sold too soon. So as a human, I'm thinking about that. And as a robot, I shouldn't be. As a robot, I wouldn't be thinking about that because as a robot, you know, he doesn't have emotional feelings. So I make that, I bring this up because this point is important, because you're a human. I'm not teaching robots, okay? This is 2016, 2017, even probably all the way up to like 2040 or 50. I don't think I'll be teaching robots. So you as a human have to understand your humanity. You know, you have to understand that a little bit of you is going to want to see action. A little bit of you is going to want to feel that kind of like, I'll call it like the Vegas pull, where you want to beat the odds and you want to feel special. And, you know, obviously you have to try and contain that feeling. You have to try to minimize that, because on a purely numeric value stance, DELT was a sell, an entire 100% sell at 250, and I did not sell all my position because I'm human. And if you ask me right now, you know, now that I see the numbers, now that I see that it's in black and white, would you have sold everything? And obviously, you know, I'm trying to pretend I don't know what's going to happen, but I really don't think that I would sell everything, because I want to give these stocks time until the market open. You know, because I want to see what they're capable of. And I know it doesn't make any sense. I know I've said, you know, treat trading like a business and really try to contain emotions, but I don't think there's any chance in the world that I would have sold my entire position. And maybe that's my flaw. You know, maybe that's why I'm a teacher and not a big hedge fund manager, because big hedge fund managers can just be like, okay, no action, I don't care. The numbers say sell it. Maybe that's what it takes to become a billionaire. I don't know. I know a few billionaires. I've met them, I've hung out with them, and they are the weirdest, strangest people you will ever meet. So I hope I don't lose my humanity, even if it costs me a little money. And, you know, as EVOK proves, you know, the numbers didn't really look good overnight because of the risks, because of, you know, how bad of a company it is. But sometimes the numbers can be wrong. So EVOK was the one I coulda, woulda, shoulda held overnight, but it's not my pattern. It's you know, the numbers didn't add up, but those students who did believe in it, remember those humans who went against the numbers, who maybe don't even know the numbers, but they're still going against the numbers, and they were rewarded. So I bring up these examples to show you the good and the bad of this grading system. Oftentimes it's going to be very good. It's going to be very right. Sometimes it's going to be wrong. So I don't want you to think that just because something is rated low, it can't spike, or just because something is rated high, it can't fail. Any stock you can be wrong on, and any stock you can be right on. What these numbers mean, though, is there are better odds at certain circumstances. You know, right now I'm watching TSRI is still the biggest percent winner. EVOK is up there. SPU is up there. DAIO is a new earnings winner, but it's not really volatile enough for me. It's only up 7%. The big play that I wanted to say was Groupon, where it's using, you know, $5 a share as resistance again. And it's trying to bounce, but it just can't. So, you know, it failed yesterday and then tried to bounce and then failed again. And now that's exactly what's happening again today. So maybe Groupon will be good later, but you need to respect these key levels. And also, I mean, even if it breaks out, I mean, it's just not that volatile of a stock. I'm in this because I want to make 50 cents, $1 a share on a $3, $4, $5 stock. Sometimes $2 a share is possible. With Groupon, I mean, it's a struggle just to go up 20, 30 cents. So always beware. This is level 2, and you can see, look at this wall of sellers. I mean, there's so many sellers here and so many buyers on the ask, or on the bid here, and so many sellers on the ask here. It's so tough to even move a penny. So I try and stay away from that kind of too much liquidity. I prefer volatility. I do need there to be some liquidity, but like TSRI has traded 2 million shares on the day. EVOK has traded 19 million. It's still a little too liquid for me. SPU has traded 2 million. So I like the 1, 2, 3, 4 million marker. So just wanted to review today's plays. Again, I feel fortunate that I'm up between the two plays. I traded pretty well, and now, you know, out of the four trades that we've gone over, I'm 2 for 4, and I've made roughly $2,000. So you got a pretty good idea of the kind of trading that I do so far. All right, so just wanted to do a quick video. We've got roughly 8 minutes left until the market close. And remember, I was kind of saying, you know, EVOK, bad sushi example, like why does it keep going up? But I wasn't really, you know, I mean, I was kind of disappointed that I missed it, but not really, because this is not my pattern. And remember what I said. I mean, this was just a few hours ago when I recorded the last video, and I said, with these kinds of patterns, bad stuff tends to happen. And I actually, the past few hours, I've been recording another part of this DVD, so I totally missed this. But right here, you can see it fell off a cliff from 380, and it is now 265 because guess what they did? They announced at 3:15 p.m. on a Friday afternoon a $10 million registered direct pricing at the market offering. And what that means is basically, you know, they're selling $10 million worth of stock at the current price, which was roughly $3 a share. So they raised, you know, some good money at inflated prices. This is a quasi-legal pump. And if you look at who did it, it is Robin and Renshaw, a unit of H.C. Wainwright. And this, you know, once you get into the penny stock world, you start to understand that all of these companies are pretty much guaranteed to fail. You don't know which ones actually are, but you can make a solid guess that 99.9% of them are going to go belly up. The only reason that they exist, the only reason that they are stocks, is because the insiders can sell some shares and or get paid a salary while claiming that the company is going to work. When a stock drops 60, 70, 80%, like I said, it is the bad sushi example. And I'm very proud of so many students who, you know, profited into today's run-up. But this is exactly why I do not buy this pattern, because bad news is usually right around the corner. Something happens where, you know, it's not dropping 80% this time, but it is definitely dropping substantially off the highs. And, you know, you could put all the stop losses you want. You're not going to get out. I mean, it dropped from 380 down to like 320 in about a minute. So you can't really protect yourself if you are long. You know, it wasn't really doing that well to begin with. I mean, it had a nice morning spike, but it was kind of fading right here. But this is the bad sushi catching up to you. And, you know, I'm glad that at least I teach my students to take profits. So I know, you know, you saw them tweet earlier where they're just in it for a morning spike. But what if this news had been overnight? You know, this is kind of a rare example of news, you know, intraday. Most financings are done overnight. So if this had been done overnight, all of those people who would have bought, you know, would have lost. And, you know, they would have been angry, but they would have blamed, you know, penny stocks or, you know, the company or Robin and Renshaw, when in fact they should blame themselves. So I'm kind of disappointed that this didn't happen overnight. You know, I'm happy that my students made money, but they learned the wrong lesson. And so now I have to reinforce the lesson here. You know, I'm so late for this trip that I'm going on right this minute. But I had to make this video lesson before the market closed, just so that you understand, you know, this pattern does catch up to you more times than not. And you don't know the exact timing. You know, you don't know the exact news that's going to cause the drop. But trust me, okay? You want to buy uptrending stocks. You know, you can be wrong sometimes, like I was on DELT, but at least I can cut losses pretty quickly, as opposed to terrible, terrible, terrible charts like this for longs, where if you make money, you know, you're probably kind of bending the odds a little bit. And if you stay too long, and if you don't recognize that it's such a risky situation, you know, this stock was uptrending for pretty much the whole week. People must think that I'm like insane for not buying it, and for warning against it. and, you know, nice uptrend, nice uptrend, nice uptrend, out of nowhere, boom. And this what happens time and again, and I've seen this too many times not to warn you guys. So kind of glad that my students banked in the morning, even though I know those who did learn the wrong lessons. I'm much, much happier now that I could include this in this guide so you see what happens. This is just one random example. You know, I didn't know that it was going to tank. You know, I mean, this is just a great example, and I hope you learn from it. Thank you.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.